We have with us Mrs. Deepa Sachanandani, Deputy Head of Research at Century Financial. Welcome with us, Deepa. It's always a pleasure to host you. Let us talk about the UAE indices that are targeting higher technical levels, in your opinion, today. Where are the technical targets for Abu Dhabi market and Dubai market?
So Abu Dhabi markets is currently already at 9,370 levels. We are expecting it to go higher towards 9,450 levels. If it manages to sustainably clear those levels, we could even target 9,600. On the downside, we have a lot of support in terms of it's trading above all the three moving averages. Immediate support would be seen near 9290, followed by a sound support around 9,100 to 9,150 levels. As far as DFM is concerned, again, the momentum has really been positive above all three moving averages. If the next level, if it sustainably moves higher, would definitely be the previous high near 4,400 levels. On the downside, 4130, 4125 levels should act as a strong support because all three moving averages, that is the 100-day, 200 and 50-day moving averages, are coinciding around the same levels. So it should act as a strong support in the near term. So overall, the momentum for all the indices seem to be positive, in line with the global markets, especially the US markets.
Deepa, you have pointed out to this point today, to what extent are we going to have further correlation, and the investors will be focusing on the international development in the global markets, specifically the Fed monetary policy. To what extent the impact will be clear on the movement in the UAE markets?
So yes, like you said, generally, like if you see since 5th August, DFM is up by almost 6%, ADX is up by almost 4.5%. The recovery has been in tandem with the US markets, which and the global markets, which witnessed a major downfall following the Japanese yen carry trade collapse and things like that. Also, concerns about the unemployment report in the US created a lot of havoc and recession fears. So that led to a fall in UAE markets in tandem with the international markets, and the rebound has also been significant in tandem with the international markets. So we are definitely seeing a lot of replica move coming across UAE markets. Having said that, UAE markets by themselves have a lot of positive attributes attached to them as well. Like we saw the recent inclusion of three stocks in the MSCI indices, and then apart from that, the overall population growth in UAE has been significant. From 10 billion or 10.5 odd billion, it's expected to move up to 12.5 billion in 2024. Also, the GDP is expected to grow up from 3.9% in 2024 to almost 6% in 2025. That's the expectations, and that is primarily going to be led by the non-oil GDP sectors. So overall, when the economy is in such a good shape, we do expect the indices also to reflect the companies and the earnings to reflect the same, and so ultimately the stocks would move higher, and likewise the indices. So overall, we are expecting positive movements in the UAE markets. Coming back to what is expected from the US markets, as far as the FOMC meeting was, the meeting minutes just happened yesterday, wherein they stated that almost all the members are looking forward to a rate cut in the coming meeting in September, and also most of them saw the inflation coming down towards the target levels. And if they don't go for a rate cut in the upcoming meeting, they do see some economic downside risk coming in. So overall, markets are expecting a rate cut. And also, as far as the recession fears were concerned, that have subsided to a great extent, despite the the lower revision that we saw for the non-farm payrolls, which came in lower by 818k, which is almost 68,000 job cuts in every month in the last 12 months ending March. So despite the deduction, what is happening is that the number still stands, the non-farm payroll number still stands much above 100K, which is a sound and stable sign for the economy. So overall, markets are not seeing signs of recession, and they are looking at a rate cut, as wherein the Fed would be able to achieve some kind of a soft landing, which is why the overall optimism is there in the markets, and stocks have been moving on the higher side.
Deepa, since you have pointed out to the economic situation, and here we're talking about the correlation of the Emirati markets to the oil prices, we have expectations that we will have less than $70 for the oil price. In your opinion, to what extent will that leave an impact on the movement of the markets here?
So the impact previously would have been significant, but now in the last few years, given the diversification that we've seen towards the non-oil sectors, especially the tourism, the real estate, or even the financial sectors, they've been performing fantastically well. And the biggest driver, like I said, for the UAE markets has been the massive population influx, which is in turn driving the economy and the business. So overall, even if oil prices do take a dip, we don't see it having a massive impact as it used to in previously. So it would have some impact nonetheless, but the impact would not be as significant as in the past, and the other sectors of the economy, such as the banking, the real estate, or even the tourism for that matter, would compensate for the fall in oil prices.
Thank you so much, Deepa Sachanandani, for being with us. It's always a pleasure. Thank you, ma'am.
Thank you.